Ever since the beginning of September, the market has been in a steady uptrend, and only over the course of the last week have we seen any kind of substantial pullback, and that itself has been really small. We've pulled back from 6,700, the highs we reached a few days ago earlier in the week, to below 6,600, and now we've seen a bounce just in this last Friday's trading session. The S&P was up 0.59%, closing at 6643.70. We've seen the GAM exposure data very sticky around the 6,600 and the 6,500 strikes over the last week, suggesting a pullback could commence following that big monthly OPEX for September. And in fact, we did see a rollover, which we've been discussing over the last week and a half as a possibility at the start of this new OPEX cycle. But scrolling up the options chain, looking at our gamma exposure data, we're continuing to see gamma exposure growing at the 6,800 strike as well as the 7,000 strike, basically just reiterating to us that any dips will continue to be bought by market participants. There's a ton of investors out there that remain extremely bearish, and so a lot of those investors are still playing catch up with the markets since the run back at the beginning of April. And if you look at this AAII sentiment report, even over the course of the last couple of weeks, as we have made new all-time highs, bearish sentiment is still above bullish sentiment. And so that's a big problem for bears and for investors that are looking for a big pullback to get back into the market. And going right along with that thesis is the volatility index can't even stay above 16 at 1529 at the end of Friday's trading session, down 8.66%. Volatility compression continues. Every single little spike that we've seen above the 50-day EMA, which is the red line on the chart, every single spike above that has been immediately met with big volatility selling. And so this keeps upward pressure on the market, and it's going to be really difficult to see a big sell-off with the VIX sitting at 15. Taking a look at small caps, IWM did see a little bit of a pullback over the past week as it just dipped just barely above its previous high back in November of last year. A lot of participants were expecting a big breakout. It does look like a little bit more consolidation is going to be needed. We do see quite a bit of negative gamma exposure, and so there's a lot of contrarian investors betting against this move, especially in the options market. We're seeing negative GEX between 220 and 240. So that's weighing a little bit on the price action. But I think overall, when we look at the picture, we're continuing to see gamma exposure growing, at this 250 strike and higher. And so I do think even though there's been this battle between bulls and bears, at least in the options market, the overall trend continues to remain up. And we do think that even after a period of consolidation that may take a few weeks to play out, but I think eventually buyers will overwhelm sellers and we'll see a breakout into year end. We are playing for a breakout in two of our portfolios. We have long bias positions with out of the money call debit spreads on IWM into the December expiration. And so that's something that we're continuing to look for, a big move in IWM over the course of the next 3 months. By the way, you can track our trades in real time as we manage our options portfolio by becoming a member at geeksoffinance.com. You can also check us out for free in our community Discord and see what we're trading this week. I'll put links in the description below to both of those so you guys can check it out. Next, let's take a look at GLD. The gold markets have been extremely strong over the last year and a half and remain so. We saw GLD up on Friday, up 0.58%, closing at 346.74. Of course, we broke out back in August out of this big consolidation, basically a 3-month consolidation, which had a huge move to the upside. We've been playing GLD as a weekly income strategy. You can actually check this out in our community Discord. We've got our GLD weekly income strategy sub-thread where we've been tracking this strategy over the last 5 months. And we've been averaging a little bit over $1,000 a week. Just this past Friday, we locked in $2,290 profit on our short September 26 GLD 345 puts, and we rolled those out to the 345 puts in next Friday's expiration. And basically, even though we didn't get a whole lot of action over the course of the last week in GLD, those 345 puts basically decayed and we were just collecting premium on that end of the trade. Of course, we are holding a hedge, so this is more of a diagonal type of strategy. We have longer puts in the 338 strike out in the October 17th expiration. So we continue selling premium against those longer dated puts, and rightfully so. The options market is giving us the green light, and basically has been throughout this year, even during this consolidation period. The tilt was still to the upside, and so every dip was getting bought. Basically, the overall trend continues to remain higher. And if we look at the gamma exposure data, we see, of course, 345 is the main gamma exposure concentration, but this 350 and 355 strike has grown substantially over the last several trading sessions. We continue to see volume skewed to the upside. If you just look here, everything is basically from 340 and higher. And basically this skew just shows us that market participants are continuing to look higher up the options chain for potentially further upside in GLD. Next, I want to take a look at a couple of specific names that are at the top of our watch list to trade this week. One is Apple. Apple was down on Friday 0.55%, closing at 255.46, but Apple has really made a substantial move since the beginning of August, when it was trading in the low 200s. So basically a 25% move over the course of less than 2 months. That's a huge move for one of the largest companies in the world. The gamma exposure picture was directing us to the 250 strike, and basically we can see gamma exposure continues to grow around 245 upwards towards 280 on the lower end of the probability spectrum. We are approaching this potential resistance zone and our upper dealer cluster zone, and so we could see some sort of consolidation or pullback in the coming weeks. That would be an opportunity to re-enter a position in Apple for the next leg higher. You can see this 50-day EMA continues to rise rapidly, and so over the course of the next week or so, if we get a pullback into or near that 50-day EMA, that's where we're going to look to enter potentially an out of the money call debit spread position, with the ultimate thesis that Apple could break out towards these higher gamma exposure concentrations. Next, let's take a look at Tesla. Tesla is a position that we actually just initiated recently. It's actually up 4% on Friday, trading at 440 and 40 cents. Looking at the gamma exposure data, we're seeing the 450 and the 500 strike as the largest gamma exposure concentrations. And I think this is a similar pattern that we're seeing with a lot of other names like Apple approaching these prior resistance levels. Tesla still has a little ways to go, so I think it could hit 500 in the coming month or two, and so that's something that we're going to be looking out for. If we just take a look at our 3D gamma exposure surface model, you can clearly see that the gamma exposure is largest at the 450 strike in the October 3rd expiration, and you got to come out to the November expiration to see the largest gamma exposure at that 500 strike. So basically what the options market is telling us is that participants expect that Tesla would hit 500 by November 21st. So it's that big expiration in November. So it's about 6-7 weeks away. Basically, we think price will hover around this 450 strike. And you can just see that if we zoom in here, there is some interest at the 500 strike in the October 17th expiration, but the vast majority of it is in the November expiration. And so market participants are giving this a little bit more time to play out, but a 10 to 15% move over the next 6 weeks or so is what the options market is betting on for Tesla. And guys, remember, you can still get $300 off our yearly portfolio manager tier subscription. Use code September 2025 at checkout. We do have a few spots remaining, but this promotion is going to be ending as September is wrapping up, so definitely take advantage of it while you can. Members get full access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies. And you'll also get access to the premium channels in our community Discord. We've got a ton of great traders in there sharing their own trade setups and strategies. And you can also track our trades in real time as we're managing our options portfolio. I'll put links in the description below to all of that so you guys can check it out. Thanks so much, everybody, for watching, and we'll see you guys in the next video.